Let's clear the air immediately. The term offshore banking probably conjures images of spy thrillers, numbered Swiss accounts, and shady characters moving illicit funds. That cinematic fantasy is not only outdated but dangerous to believe. The reality of modern, legal offshore banking is far more mundane, yet incredibly powerful for the right person. It's about geographic diversification, accessing international financial services, managing multi-currency income, and operating a global business efficiently. It is a completely legal financial activity practiced by expatriates, international investors, freelancers with clients worldwide, and business owners looking to hedge against local economic instability. The critical, non-negotiable principle is this: offshore banking is about reporting, not hiding. The goal is not to make your money invisible to your home country's tax authorities. That is illegal tax evasion. The goal is to place your legally earned, fully declared money within a stable, sophisticated financial system that serves your international life better than your domestic bank can. In this guide, we will walk through the entire process of opening an account the right way, from determining if you even need one, to selecting a jurisdiction, navigating the paperwork, and understanding your ongoing compliance duties. By the end, you'll see it not as a secretive tool, but as a practical financial decision with clear pros, cons, and procedures. First, we need to define what offshore really means. It doesn't necessarily mean a tropical island, though it can. An offshore bank account is simply an account held in a country where you are not a tax resident. For an American living in New York, a bank account in Germany is offshore. For a German living in Berlin, an account in Singapore is offshore. The appeal comes from the specific financial regulations, stability, and services offered by that foreign jurisdiction. Now, who is this actually for? It is not for the average person looking for a slightly better savings rate. The complexity and cost only makes sense if you fit a specific profile. You are a prime candidate if you are a digital nomad or expatriate living abroad, earning income in multiple currencies. You own a business that invoices international clients, and you need to receive payments in euros, USD, or GBP without massive conversion fees. You are an investor seeking to buy foreign stocks, bonds, or real estate and need a local currency account to facilitate transactions. You have legitimate concerns about the political or economic stability of your home country and want to safeguard a portion of your wealth in a more stable jurisdiction. Or you are planning for international retirement and need to establish financial footprint in your future country of residence. If you don't see yourself in these scenarios, an offshore account is likely an unnecessary complication. The common mistake is pursuing it for the wrong reasons, like trying to secretly hide assets from a spouse or the taxman. That path leads directly to legal and financial disaster. Assuming you have a legitimate reason, the single most important decision you'll make is choosing the jurisdiction. This isn't about picking the place with the most secrecy. In the post-FATCA world, true banking secrecy is dead for most countries. It's about picking the place with the right blend of stability, service, and accessibility. We can break jurisdictions into tiers. First, the premier global financial hubs: Switzerland, Singapore, and Hong Kong. These are for high net worth individuals. Banks here are incredibly stable and offer top-tier private banking services, but they often require minimum deposits of $100,000 to $1 million USD, and they are highly selective. They will perform extreme due diligence on you. Next, the classic offshore centers: Cayman Islands, British Virgin Islands BVI, Bermuda. These are popular for holding companies and investment funds, but for personal banking, they can be less accessible remotely and are often more focused on corporate services. Then, the emerging practical hubs: Portugal, Georgia, Panama, and Mauritius. These often offer good banking services with lower minimums, are more friendly to remote opening, and cater well to expats and entrepreneurs. Your choice must be informed by your profile. Are you American? Many banks simply refuse U.S. citizens due to the heavy compliance burden of FATCA. Your options immediately narrow. Are you looking to open remotely, or can you travel in person? Post 9/11's and post 2008 financial crisis regulations have made mail-order offshore accounts a myth for most reputable banks. Many require a personal interview, either at the branch or via video call with a notary. The insider pro tip is to look at jurisdictions that actively want your business type. For a freelancer, Portugal's NHR regime and its banks might be perfect. For a crypto trader, a licensed bank in Georgia or Switzerland that understands blockchain transactions might be necessary. Once you've identified a target country and a specific bank, always choose a well-established, publicly listed bank, not an obscure, online-only entity. You face the most grueling part, the application and due diligence process. This is where people fail. The bank's compliance officer is not your friend. Their job is to reject applications that pose a risk. You must present a crystal clear, legitimate story. The documentation required is extensive and must be pristine. Expect to need, at a minimum, a certified copy of your passport. Not just a photocopy certified by a notary public or sometimes an apostille. Proof of residential address, like a utility bill or bank statement from your home country, usually not older than 3 months. Detailed proof of the source of your funds. This is the big one. You must show how you accumulated the money you want to deposit. This could be years of tax returns, business financial statements, property sale documents, or investment portfolios. A detailed CV or resume explaining your professional background. A professional reference letter from your current domestic bank, sometimes called a banker's reference, a clear description of the intended use of the account. To receive freelance payments from EU clients in euros and hold savings for future property investment in Portugal. The common, fatal mistake is providing inconsistent information or incomplete documentation. If your story doesn't add up, if your reported income doesn't match the lump sum you're trying to deposit to, will be rejected and possibly blacklisted. My pro tip, before you even fill out the application form, assemble this entire document package as if you were applying for a top security clearance job. Have it already translated into the required language by official translator if necessary, and certified where needed. Now, we arrive at the most critical, legally mandatory part of the entire process: compliance with your home country's tax laws. For U.S. citizens and tax residents, this is non-negotiable. The moment your aggregate foreign financial account balances exceed $10,000 at any point in a calendar year, you must file a FinCEN Form 114, the FBAR Foreign Bank Account Report, with the Treasury Department. Additionally, you likely must report the accounts and any income from them on Form 8938 attached to your annual tax return, with even lower thresholds. Failure to do this carries draconian penalties, starting at $10,000 for non-willful violations and going up to 50% of the account balance per year for willful violations. It can result in criminal charges. For citizens of other countries, similar rules often exist, like the Common Reporting Standard (CRS), which automatically shares financial information between over 100 countries. The point is this: your offshore bank will almost certainly report your account information and interest income to your home country's tax authority under these treaties. The authorities will know about the account. Therefore, you must report it first. This is the legal framework. Offshore banking in the 21st century is about transparency with your authorities, not secrecy from them. You are using it for financial utility, not concealment. In conclusion, opening an offshore bank account legally and safely is a process of extreme due diligence, both from the bank on you and from you on the legal requirements. It is a tool of convenience and diversification for a globally mobile lifestyle, not a magic wand for secrecy. The steps are clear. Honestly assess if your international life justifies the complexity. Carefully select a stable jurisdiction that matches your profile and citizenship. Meticulously prepare a bulletproof application package that clearly demonstrates the legitimate source and purpose of your funds, and above all, commit to full transparency and compliance with all tax reporting obligations in your home country. It is a significant administrative undertaking, but when done correctly, it provides unparalleled flexibility for managing your global finances. Disclaimer: I am not a lawyer, tax advisor, or licensed financial professional. The information in this video is for educational and informational purposes only. It is not a substitute for professional legal, tax, or financial advice. Offshore banking involves complex legal and tax implications that vary by your country of citizenship and residence. You must consult with a qualified international tax attorney and a CPA who understands cross-border reporting requirements like FBAR and FATCA for Americans before opening any foreign financial account. Failure to comply with tax laws can result in severe penalties, including criminal prosecution.